You know, I've been wondering with this technology, Marianne, if it doesn't change the long-run trajectory of growth. You know, over the long run, we grow about 2%, sometimes more, sometimes less. But now it seems that we can do more with less. We can do more for less. There's huge demand for everything from construction equipment to cooling, HVAC, energy. You know, it seems like we're adding jobs again. So is the economy getting a huge boost here?
I think the economy is doing very well, and surprisingly very well, but it's because of this AI build-out. The demand is very high and the supplies are very short, right? That's economics 101. When you have high demand and low supply, prices go up. And one of the little things that I learned when I was at Merrill Lynch many years ago, when PPI starts going up, early stages, not crazy, it really boosts, it's a good indicator for corporate profits. And we have been seeing PPI go up, and corporate profits are going up. And that's why I think the market is so focused on stocks, and why we're hitting new record highs is these companies are not as sensitive to energy, and they're able to produce stellar earnings, and it's being reflective in the stock prices.
The thing that I just wonder is in this future, and it feels like an increasingly nearer future, if we get this promise of AI, it's very clear which part of the market it benefits. Are we fully pricing in the losers? I know you say, Matt, it adds jobs, but a lot of those jobs are just temporary. You build a data center, it requires all the construction, all the things that go into it, but you basically just need like 50 HVAC people running around managing that. Versus if you were to have the same amount of spending in healthcare or a traditional job like automotive or pharmaceuticals, that would be adding like 15,000 jobs or 1,500 jobs for the same amount. So do you look at that and say, okay, yes, the economy gets a boost, but the labor market suffers, and maybe things like consumer or more cyclically oriented companies become less attractive? Well,
right now, the labor market is steady to actually improving. And what happens if jobs get created that we haven't even thought of? Like I heard a person saying, and this is so true, look at influencers. Who would have thought that you'd be able to create good income? There are millionaire influencers that are out there.
And by the way, you survey kids and they're like, what do you want to be when you grow up? And they're like, YouTube star, influencer.
Yeah.
So, you know, and when I first started seeing this, you know, it boggled my mind, but it's a real career. We don't know what jobs are going to be created from AI. And my guess is we'll probably have more job creation than we actually realize.
Well, we also need a lot of old economy jobs, right? It's not just HVAC, plumbing, and electrician. You also need
boilers now.
I was going to say boiler makers.
My favorite story.
Because they're not enough gas turbines and they're so hard to make. But it's really astounding. Still, we didn't see, oddly, the internet change the trajectory of growth, like over the longer term, right? We're still growing at the same pace as we were before the internet. So this technology isn't going to necessarily move the needle on how macroeconomists view the U.S.
Longer term. It can have a shorter term over a couple of years, but then what happens is you reach capacity, and then things flatten out, and probably in terms of equity markets, probably peak and go into a major correction.
And by the way,
we're far from that.
But your super bullish target is for the end of the decade, so
correct.
2030. What is it about these big round years, 2000, 2030, you know, the dot-com bust, and what I'm guessing you're forecasting to be at least a lull after that, right?
So there's something that's called the decennial pattern. It's something my aunt taught me. She was a technician for many years, Bernadette Bartels Murphy. And what she told me is the year zero tends to be the year where there's euphoria, right? You're going into a new decade, everybody's happy, and markets tend to have a huge spike up and peak, and then you go into a lull for many, many years. So secular bull markets last 15 to 20 years. We started a secular bull market in 2013. I'm estimating we're going to end that cycle in a bubble, and that's how I get to 10,000 to 13,000. And then we peak, and then, Matt, this is what you don't want to hear. We go into a secular bear market for 15 to 20 years, meaning that stock prices are flat for that time period.
So we basically have 4 years to keep riding this wave.
Yes, and it's going to be an amazing wave.
By the way, like the earnings this season have been so incredible. They've overshot all analyst estimates by a long ways. In fact, when you usually see this type of uptick in growth, it is coming out of recessions. It's coming out of COVID is the closest comparable. But we're not really in that part of the cycle. I just wonder what you make of this like addition of corporate America. And I guess maybe 2/3 of it is semis to bring it back there. But this addition into the earnings that we're seeing.
Well, we're in the digital era. And what's happening is technology is getting better and it's getting adopted a lot faster. Even the CEO of Anthropic said their demand far exceeded their expectations. I think their high-end expectations was like 20-fold in growth, and they got 80-fold in growth, which is incredible. So I think that's what's happening is we're not even understanding how AI is transforming companies, economies, and the world. We're still trying to figure that out and digest that. But if we follow what analysts are doing with their numbers, they're still raising their estimates. So that is still very bullish for the markets.
I had no idea this was a trade that you passed down through the Bartels family.
Yeah, second generation. Aunt Bee went to Wall Street in 1956, and she was on the trading floor of Ladenburg Thalmann, 25 Broad Street.
Market technician royalty. We are so honored to have you here.
I've known you for 20 years. I didn't know that, so I'm learning stuff every time you come on.
Thank you.